guys, welcome back to my channel, Lovely Gravy. I hope you guys are having a lovely day. This is going to be part 3 out of 4 of Forex, and we are going to talk about candlesticks and candlestick patterns. Guys, if you are able to understand how to spot these candlestick patterns and combine them with the other strategies we're going to talk about in the next video, you are going to be a successful trader. I use candlestick patterns today in my trading to give me a hint about what's going to happen next in the market. And I use it in combination with support and resistance and sometimes some other strategies as well, which we will talk about in the next video. But y'all know how I do, keep it simple, real simple, and I get straight to the point. So let's get right into it. All right. So this is Learning Forex for free with me, your girl, Lovely Gravy, candlesticks and patterns. All right, so the first thing we're going to go over is candlesticks, which we talked about a little bit in the last video. We talked about how the high of a candlestick is basically during this time period that this candlestick was formed, whether it be 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, or what have you, daily, any of those charts. The high is the highest point that price reached during that time period. The lowest point that price reached during that time period. We talked about the body being, encompassing the middle of a candle, and it just basically represents the open and the close. It just basically represents the open and the close of price. And then we also talked about what the open and the close is. The open, again, is where price started, or is where price was at when that candlestick started to be formed. And then when that candlestick ended, or that time period ended, the close is where price stopped or where it ended. And again, so for a sell candle, obviously would open up here, and if it's going to sell down, it will close down here at the bottom. A buy candlestick is buying up, so obviously it's going to open down and close higher than the open. All right, so now let's get into the language of candlesticks, guys. Candlesticks do have their own language, guys. And if you understand the language of candlesticks, then you're going to be a very successful trader. You have to pay close attention to the body of the candlestick and the wick of the candlesticks, because they tell you, these candlesticks will tell you who's in control of the market. All right, so when you look at a candlestick, if you see that the candlestick is green, it might not be green on every chart, but typically it's green on most charts. If you see that the candlestick is green, that means that the bulls won for that particular session, whether it be a 5-minute session, a 4-hour session, a daily session, whatever have you. If you see a red candle, that means that the bears won. That was a sell candle, and it was selling down during that session. When you see candles like this, and we'll get into what these candles are in just a few minutes here, that means nobody won. It's not red. The bulls didn't win. The bears didn't win. That means price closed at or very near the same price that it opened. So nobody won. But if you pay very close attention to the tails, to the wick, or to the shadow, those are interchangeable terms. Tail, wick, shadow, they're interchangeable. They all mean that the long tail of a candle, right? This long part of the candle. That's what it means. If you pay attention to those long tails, they can tell you what's going on with price. So obviously we look here and we see here that the clue that this is giving us is that bottoming tails are a clue that buyers have taken control of the market. So why is that? Well, I can explain it to you. So obviously this candle looks like price tried to go down. The sellers tried to bring it down, but the buyers actually brought this back up. The buyers actually brought it back up all the way to the top of the candle. So that's a hint to us that the buyers maybe are in control here, okay? The same is true for the top tails or the top long shadow. price was pushed up. It looks like the buyers tried to push this all the way up, but guess what? The sellers came and said, nope, I'm ending this session all the way down back near the close. So the sellers actually pushed it back down. So that's a hint to us that the sellers might be about to take control of the market. All right. Candlestick patterns, when combined with other strategies, guys, I cannot stress this, do not rely on candlestick patterns alone. And I'm going to give you an example in just a few minutes here of why you should not ever rely on a candlestick pattern alone by itself, because they're not always valid in the markets. You need to combine other strategies with candlestick patterns in order to be able to give yourself a better guess or a better hint as to what the market is about to do next. Okay, nothing is certain in the markets, guys. So I want you to remember this. Even if you're looking at candlestick patterns in combination with another strategy and you see that the market should indeed go this way because these are the confirmations that you're getting, I just, guys, want you to keep in mind that nothing is certain in these markets. Nothing is certain. That's why people lose money sometimes, because nothing is certain in the markets. But since we know that the markets are algorithmic, if you do not know that the markets are algorithmic, that there are a series of algorithms, patterns that are created by price action, and the markets repeat themselves, their patterns, their algorithms. Hello, big hint there. All right, guys, then you'll never understand the markets if you don't understand that. But we can use these patterns, knowing that the market gives patterns, it repeats itself. Knowing that pairs and indices repeat themselves. They use patterns to repeat themselves. We can use this knowledge to help us make our best guess of the next move. Okay, moving on. The first candlestick pattern I want to talk about today is the engulfing bar. So this can be bullish or this can be bearish. If it's bullish, the second candle formed will be green. If it's bearish, the second candle formed will be red. The bullish engulfing is telling us that buyers are in control. If you see this during an uptrend, it's giving you a signal that the trend is going to continue. If you see this during a downtrend, as far as the bullish one, then that's a signal that there's about to be a reversal and it's about to go up. The same is true, or the opposite is true for the bearish engulfing pattern. It's telling us that the sellers are in control. It's a trend reversal for the top of an uptrend. If you see it at the top of an uptrend, it's giving us a signal that, hey, the trend is about to reverse and sell. Or if you see it during a downtrend where the market is selling, it's just giving you a continuation signal. The doji candlestick, guys, which we saw at the beginning, these candlesticks that have no body, they're telling us that nobody won. It's basically indecision in the market for a lot of them. But they're also telling us that the trend, whatever the trend is, that trend is getting weak and it's likely to reverse. So look for some reversal signals when you're seeing these dojis. All right, the dragonfly doji is a bullish reversal. Again, remember we talked about those long tails and what those long tails are telling us? The dragonfly doji, long tail at the bottom, is a bullish. It's telling us that the buyers are attempting to push the market up. All right, price came down and the buyers pushed it all the way back up. So that's giving us a really powerful indication that the buyers are in control here. The opposite is true for the gravestone doji. It's a bearish reversal for an uptrend. So if you see this during an uptrend, get ready to look for some signals that the trend is going to reverse. It tells us that the buyers push price up and the sellers came back down and said, no, we're going to push it way back down. And that's telling us that, hey, the sellers might be about to take this thing. Okay? You usually see these long tails when the market is testing a strong support or resistance area. And you guys always want to use support and resistance, which we're going to talk about in detail in the next video. You always want to use support and resistance in combination with candlestick patterns and any other strategy. Support and resistance is going to be the basis. We talked about it in the first video briefly. In video 1, we're talking about it here again in video 3, and we're going to go in even more detail about it on video 4, okay, guys? Because that's how important support and resistance is. If you can understand support and resistance, you're going to have a better shot at a newbie that doesn't understand support and resistance at actually making money and being profitable in the markets without blowing accounts and losing your money first. All right, so the morning star. So this is what it can look like. This middle candlestick for the morning star can either be bearish or bullish. It doesn't matter. But the point is that the last candle out of the 3 candlestick patterns formed is a bullish candle, and that it closes above the close of this first red one. Okay, so that's those are the major points that you want to keep in mind about the morning star candle. It is a bullish reversal. So if you see it at the bottom of a downtrend, that's letting you know buyers are about to take control from the sellers. It's about to go up, not down. The evening star obviously is the opposite. And again, this middle candle, it could be bearish or it could be bullish. It could be green or it could be red. Okay, guys? But the point is that the third candlestick here is the bearish candle. And if you see this at the top of an uptrend, that's telling you that the sellers have dominated over the buyers. And guess what? It's about to go down. All right. The hammer, which is a bullish pin bar or a bullish reversal signal. If you see this at the bottom of a downtrend, guys, look at the long lower shadow. All right. What did we say about those long tail candlesticks? They're telling us that there's strong movement, there's strong momentum from whoever has control of that. And especially if you see this at the bottom of a downtrend. And when I say bottom of a downtrend, I mean you see this at a support level. Okay, remember our support's on the bottom and our resistance is at the top. You see this at a level of support, the bottom of that downtrend. Guess what? It's about to go up. Okay, that's a good indication. The sellers push the market down. Okay, boop, 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 boop. That's why we got that long wick. And then the buyer said, no, no, no. Let's push this thing back up. And they actually pushed price higher than the open. This would be the open. And the buyer, and this would be the open. The sellers took it down, and the buyer said, no, 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 and pushed it above the open. Okay. So when you see this at the bottom of a downtrend, that's telling you that the buyers, they got some control here. They got it going on, and they got to push these markets up. So pay attention. All right, the shooting star. All right, the shooting star is a bearish pin bar signal. And again, pin bar, it just means long tail, long wick, long shadow. It's all the same thing. Okay, so again, it's the opposite is true for the shooting star as for the morning, or as for the hammer. Okay, as for the hammer. Okay, so again, you're gonna look for this at the top of an uptrend. You're gonna look for that at the resistance level. When I say top of a trend, I'm talking about support and resistance. I'm talking about you're gonna look for this candlestick at a resistance level. When you see this at a resistance level, oh, you know it's about to go down. The buyers push this thing up. This is the open right here. The buyers pushed it up, and the sellers came and said, no, we pushing it back down. We're going over this open. We pushing it back down over the open. Okay? And we about to take over. We got stronger selling power than you because we pushed this thing down farther than you were able to push it up. Harami pattern, or the inside bar. Okay, it can be either bullish or bearish. Okay, it just depends on what the second candle is. If the second candle is green, obviously it's bullish. Second candle is red, obviously it's bearish. It's a continuation signal. When you see this in the middle of a trend, okay, so when you see this in the middle of an uptrend, the bullish Harami one, then it's going to be a continuation. It's telling you, okay, we're about to continue the trend going up. When you see the bearish one in the middle of a downtrend, and when I say in the middle, I mean not anywhere near a support and resistance level. Support and resistance is the top and the bottom of the trend. The middle of the trend is somewhere where it's not near support and resistance, okay? Support is the bottom of the trend. Resistance is the top of the trend, okay? When you see this in the middle of a trend, meaning it's not anywhere near a support and resistance level, then you know it's going to be a continuation. But when you see it at the end of a trend, okay, then it's going to be a reversal signal. Okay, then that means the market is about to reverse. Get ready. It's also telling us that the market is at an indecision period, and the buyers and the sellers don't really know what to do next. Okay. All right. So the tweezer tops and bottoms. All right. So you're going to see a tweezer top. If you see a tweezer top during an uptrend, it's telling you that the market is about to reverse. It's letting you know that the buyers pushed price way up and the sellers pushed it way back down again. Say, nah, we can't let you take over. We're going to push it back down. All right. When you see a tweezer bottom during a downtrend, that's letting you know it's about to reverse. Sellers pushed the price down and the buyer said, nah, son, we can't let you do that. Nah, we can't let you do that. We can't let you do that. We're going to push it back up. Okay. And so it almost tricks you, the tweezer tops, because it looks like the trend is going to continue. Right. So with this first one, it almost looked like the uptrend was going to continue. But then the sellers tricked us and said, nah, you ain't finna continue. Nah. So when you see these on the charts, that's what you know, that's what they do. Let's move on. Spinning tops. Spinning tops indicate a possible trend reversal, okay? They're indecision candles. The buyers and the sellers were fighting, but no one really gained a super upper hand. Even though these candlesticks can be bullish or they can be bearish, they can show that the buyers won a little bit more than the sellers, or the sellers won a little bit more than the buyers. They're really indecision candles. And they're saying, look out. It's basically saying, hey, look out for some more signals that the trend might possibly be about to reverse. The Maribozu. Oh my God, guys. If you guys see a Maribozu, I don't even know if I'm saying this right. If you see this candlestick, okay, at the end of a trend, at a support and resistance level, it's a wrap. This is a very extremely powerful, extremely strong candlestick. This indicates that either the buyers or the sellers had full control during that session. It wasn't a fight at all. It was like a 30-year-old trying to get into a fight with a 10-year-old. Not a real fight. The 30-year-old won off gate. 1-2 punch knockout, and the bulls took it for the bearish one, or 1-2 punch knockout, or excuse me, for the bullish one, and then 1-2 punch knockout for the bearish. 1-2 punch, the sellers just took that whole session. They was just selling down and didn't stop. Okay, that's why you see no wicks. You don't see any tails, because there wasn't any kind of resistance. The sellers just took it, or the buyers just took it the whole session. I'm talking about extremely powerful, guys. If you see this at a support and resistance level, whatever that candle is, that's where the market is about to go. And you better believe that. You better believe it. Or if you see it in the middle of support and resistance, it's a continuation. That trend is going to continue. You see that in the middle of a trend, it's going to continue. Or if you see that as a support and resistance zone, you better believe. You better believe. Whatever that color that candle is, that's the direction the market is going. Extremely powerful. All right, hanging man. All right, so the hanging man is it doesn't matter whether it is a bullish candle or a bearish candle. The hanging man is a bearish reversal signal. It can mark a strong resistance level. All right, when price is rising or in an uptrend, it indicates that the sellers are starting to outnumber the buyers. Okay, so that's what the hanging man is during an uptrend. That's what you want to look for. All right, the inverted hammer, you're going to look for this during a downtrend. It's a bullish reversal. You see this during the downtrend, that's telling you that the buyers are trying to bid price higher. The sellers push it down, but the buyers still manage to push it back up. Okay. The 3 white soldiers. Guys, the 3 white soldiers can look a little bit different. They're bullish signals. They're all going to be green candles. It has to be 3 green candles in a row. It can be one red in the middle of 3 green. That's not going to work. It has to be 3 green candles. You see this in the middle of support and resistance. It's continuation. It's going to continue that uptrend. You see this in the middle of an uptrend, it's the continuation signal. It's telling you keep buying because we're going to keep going up. When you see this during a downtrend, and I don't care if it's in the middle of a downtrend or at a support and resistance level. When you see these three white soldiers during a downtrend, oh, the market is likely, more than likely, about to do a swoop. Swoop, swoop, swoop. It's about to reverse, okay? The important thing to remember about the three white soldiers is that the second and third candles are going to close above the prior candle. So the second candle is going to close above the first one, where the first one closed, and the third candle is going to close above where the second one closed. Can you see that? The close above the prior one, okay? That's important to note that. Otherwise, it's not a true three white soldiers. The opposite of three white soldiers is the three black crows. Obviously, this is a bearish signal. And the opposite of the three white soldiers is going to be true for the three black crows. If you see it during an uptrend, I'd bet on a sell. Because that's telling me the sellers, they trying to get it. All right. If you see this during a downtrend, I would bet on a sell. Because it's telling me we still got control of this thing. Big time, buddy. All right. And the important thing to note here is that the second candle and the third candle are closing below the close of the candle prior to. All right. It's important to note that. Or it's not a true three black crows pattern. The three inside up. And guys, we're almost getting done here with these candlesticks patterns. There's many, many more, but for the time being, these are the ones that I use. And I think they're really going to help you guys. So with the bullish reversal, it's a bullish reversal at the end of a downtrend. You see this at the end of a downtrend? It's telling you the buyers is about to take control. It's called a three inside up. And the important thing to note here is that the second candle, it closes at least midway of the first. If it closed all the way down here or something like that, it wouldn't be a valid three inside up. And that the third candle closes above the high of the first. Okay, that's just what's important to note. The opposite is true for the inside down. It's a bearish reversal at the end of an uptrend. You see this at resistance level. That's what it means by the end of an uptrend. It means it came to a resistance level. Okay, so you see this at a resistance level at the end of an uptrend, and then you better bet that market is about to reverse. Okay, the important thing to note: this second candle closes at least midway through the first one, and then the third candle is going to close below the low of the first. Okay, that's letting you know the seller said we taking this, it's ours. All right, that's all the candlestick patterns I have for you guys today. Thank you so much for watching. The next video, guys, you want to stay tuned for the next video because it's actually talking about strategies and how to, we're going to look at some charts. We're going to look at some real charts, and we're going to see how we can actually apply the candlestick patterns with the other strategies that I'm actually going to talk about in the next video for you to make some real money. Guys, I'm going to show you on real live charts that these strategies work. I'm going to show you how they work and why they work. I'm going to show you what support and resistance looks like on a real chart. I'm going to show you how to spot these candlestick patterns on a chart. So guys, you want to make sure you watch the next video because that's the video that's really going to get that gravy up. You finna get good. Y'all, I'm saying it's time to elevate. It's time to elevate. It's time to elevate yourself. It's time out for playing and sitting around and allowing life to do whatever it wants to do with you. It's time out for that. It's time to elevate. It's time to educate yourself. And it's time to elevate yourself. Point blank, period. If you need help with goal planning, I do help with that. I'm a life coach, a lovely certified life coach. And so if you need help, basically what I do is I help people to map out a 6-week plan for your goals, whether it be a business, a new job, starting in Forex, get a new car, whatever your goal is, I will help you map out a 6-week plan to that goal. And I will be your accountability partner and make sure you're doing it. And also a resource for you. You know what I'm saying? Not just accountability partner, but I'm great with research. I can research anything and find an answer to anything. Trust if I don't already know. Because when people told me about myself, I keep learning. I got way more certifications than that, guys, on the wall back there. I have so much knowledge, it's not even funny. But that's a motto that I personally have for myself in my life, is to never stop learning. And I learn more by helping other people out. So guys, if you need help with anything, plus I'm an entrepreneur myself, so definitely if you need help starting a business, definitely I can help you. But thanks again so much for watching, guys. I had such a lovely time during this video, and I hope you guys tune into the next video, because that's going to be the key to you actually making some real money. We're going to go over the live charts, and I'm going to show you how you can make some for real money in the next video, combining the candlestick patterns and everything that we've learned about so far, and looking at some actual real strategies for you guys to get in there and make some money, because I want you guys to be prosperous and successful in 2021 and beyond. And beyond. And beyond. Did you hear me? Let's reach for success. If you never thought you were worth it before, you never thought you could do it before, here's somebody showing you for free. You don't got to join IML, which I'm going to do my IML review. That's coming up too, because I was a part of IML, and you do not need IML to trade. You don't need IML. They have helped people. I'm not even going to stunt. And I got a basis of my information from IML, but I'm not going to go too deep into that, because I feel like I would have been successful without IML, just learning and knowing what I know now, which really all of the things that I've learned and the strategies that I know now, I didn't get them from IML. I got them from YouTube University, baby. And reading books, which is what everybody needs to get back to doing. Reading is fundamental. It's so fundamental, because you can learn so much from reading. But anyway, I'm not going to get too deep into that today. Again, guys, thank you so much for watching. Like, comment, subscribe, share this video, hit the notifications bell so you can know when I'm putting up that next video, so you can know, what's your next strategy for life. And I got plenty more income opportunities to come, guys. Forex is just an easy opportunity that anybody can do, literally from your cell phone. You can do it from your phone. You can do it from the crib at the computer. If you don't have a computer, guys, stop making excuses. You can trade from your phone, okay? All right, so that's all I have for you guys today. Until next time, peace out. Stay lovely. Bye now.